Welcome to Business Innovators Radio, featuring industry influencers and trendsetters sharing proven strategies to help you build a better life right now.
Welcome to today's broadcast. Our guest is Stephanie Ardrey, CEO of the Ardrey Group, adjunct professor at UCLA, author, and seasoned real estate developer. She's also a workshop presenter with SCORE. Stephanie's firm, the Ardrey Group, is a global management consulting firm assisting hyper-growth organizations with strengthening domestic and international business strategies. They work with early-stage and established firms to address capital requirements, capacity building, and customer acquisition challenges. Welcome to the show, Stephanie.
Thank you. Janine, it's so nice. I'm happy to be with you today.
Wonderful. So today we're going to discuss capital, funding a venture for launch or growth. Now, I would advise all of our listeners to go grab a pen and paper and get ready to take some really awesome notes. So, Stephanie, let's just jump right in. Can you briefly tell us what you mean by capital so that we're all on the same page?
Well, that's a great place to start because when we talk about capital, oftentimes entrepreneurs put together their business plan and they think one of two things. Either some have the courage to ask friends and family. So we say that in the very beginning, if they have the courage, they'll start with the 3 F's, which is friends, family, and fools, right? So they try to sell their family on investing in this great idea that they believe that they have, and then they hope to get to market. The second potential place that they go is to the bank, and they say, hey, I'm putting together this business, and I need this amount of capital. Usually where they run into challenge is they don't have the right capital vocabulary. So that's kind of the starting place. You want to understand the difference between if you're looking for debt or if you're looking for equity. Because if you're asking your friends and family to make an investment, then that investment is either going to be an investment where I get a return on that investment. So I'm investing $10. I expect to get $100 back at a certain date in the future when you've executed your business plan. Or I'm making an early stage investment, but I want my investment to be treated as a loan. And so, again, at some date in the future, you're going to repay my principal plus interest, and therefore you have complete ownership of the company. Oftentimes where entrepreneurs make the initial mistake is they don't understand the vocabulary, so they don't begin the conversations appropriately. So that's kind of the issue number one.
So what are, aside from knowing capital is standing for an investment, what are some other common vocabulary words that you can share with us today that would help someone to better understand what they need to know when going into finding an investor?
Absolutely. So say you get past, the initial point A, then what I often hear is I had this very interesting conversation with a company that was attempting to expand. And they were actually referred to me by their banker because the owner kept telling the banker that they needed to get an investor because they wanted to expand. And I said, okay. Well, then he says, oh, yeah, I need to get in front of a VC. And I said, well, a venture capitalist, first of all, unless you're coming in and the floor is around a $10 million investment and you're talking about you have an exit in around $100 million range, that type of scenario, then traditionally a VC is not going to be your appropriate first step. You've got to have a sizable venture and a venture that has the ability to scale exponentially. Also with the understanding that in order to scale that venture, you might be fired from the role of CEO of that venture if it's determined that someone with greater experience operating, say, a $50 to $100 million company is more appropriate to match with that particular investment. So what I hear are entrepreneurs not understand. So in the case of the entrepreneur that I was describing, when I met with him, I said, well, give me an understanding of what you're trying to accomplish with your business. And he says, no, I don't want anyone to have any equity. So, okay, then I said, well, then you're not looking for an investor. You are looking for debt. That's a different question. That's a different scenario of who you should speak to. And then furthermore, he didn't want any input. So then you're looking for debt and you're wanting to maintain control. So you are creating a lifestyle business. There's nothing wrong with the lifestyle business, but that lifestyle business is really a closely held, maybe family-style business and not really a company that's going to have a huge upside in terms of potentially going public or being acquired or any of those things.
Okay. So a word that you brought up that maybe some people won't understand is a VC. So what is a venture capitalist?
So venture capitalists come in two forms. They're either institutional venture capitalists, for example, organizational funds that are set aside. So if I'm a company like General Electric, GE has a known institutional investment fund. Google now has a known Google Ventures, which is an institutional investment fund that invests in other potential companies. So that would be an institutional type investor. Then you also have venture capital funds where I might align with a group of other initial investors, and we seed in capital, and then we raise capital to put together a fund. So say we raise a $10 million fund that we're going to define the types of companies that we would make an investment into.
Okay. So then when you're speaking to someone that is maybe not as seasoned with their business, that they're not necessarily a startup. They already are doing some business, but they want to grow, but they're not in the million. They haven't even come close to hitting $1 million yet, but that is what they want their future to be. When they're trying to decide what type of person or entity or group to get money from, what would they do? Because they're not so big, they're still going out. Would they look for venture capitalists, or would they go to a traditional bank, or how would they determine who to go to for their next step?
So a lot of times what I find, and that's an excellent question, is the beginning place is to really understand the business. So what business are you in? So really understanding what's happening in the marketplace. Are you in a business that has a new opportunity for additional growth and expansion? So for my first question is, if your company hasn't quite crossed the $1 million threshold, what are the issues that are preventing that from happening? Is it that the company needs to expand its ability to acquire additional customers, or is it that the company needs to build additional capacity, or is it that the company is lacking sufficient capital? And so kind of within those 3 C's is where they should begin to sort of think about and then understand what are the specific goals and objectives that the entrepreneur believes is possible for that particular business. But this has to be validated by true market knowledge. So, for example, I've introduced a better mousetrap. And what I see is that if I can get my widget or my mousetrap to market, because I've created some new technology around this mousetrap, with capital infusion, I would have an opportunity to gain additional market traction. And so that has to be clearly defined and articulated. And then when you figure out that, okay, in order to expand our capacity and to execute our business plan, then you have an idea of how much money you need, because how much money you need determines the type of investor that you're speaking with. So if you're trying to raise between $100,000 and I would say $3 million, then you're really looking for an individual angel investor and or an angel group that syndicates, meaning that they may go in together to invest in your business. But I caution you, if you're looking for $1 million to $3 million and the business does not have revenues to support that number, beware, because you can run into a situation that you're asking for more capital in terms of equity, then you can demonstrate having invested in the venture and you lose control of the venture. And so that's not the goal. One, the angels do not want to run your business. And two, you do not want to ask for so much capital that it takes you out of control in your business.
Wow. That sounds complicated. I mean, I'm assuming it should be, because we're talking about a lot of money that someone's going to give you to help your business grow. So it's very
with particular
good.
Milestones.
Yeah, and it's very good that we do understand some of the vocabulary so that we're prepared to approach someone. So that's really cool that you're able to cover some of the words that we should understand when we're thinking about going after an investor. So I wanted to then go into, so we have some vocabulary under our belt. How do I start looking for these people? I mean, aside from just Googling, I mean, I'm sure there's a better targeted way to find someone that we can approach to talk about investing with us.
Well, what's so wonderful is the Jobs Act was passed, and as a result of that, there has become an overnight abundance of crowdfunding type platforms. So what you find now are a number of crowdfunding type platforms. You have higher ed institutions, so many of the colleges that have a business or an entrepreneurial department are now active with creating entrepreneurial pitch fairs and festivals. You have Startup Weekend, for example, is an organization that brings together entrepreneurs with potential investors. And then you have a number of different investor forums. So believe it or not, the initial approach is to understand what's happening in your local market. So some of the tools that I look for if I'm trying to evaluate who's active in the entrepreneurial or venture space is meetup.com, for example. I can look in any particular market across the country and look for venture groups or entrepreneurial groups, and then I can go through that list and identify which of those groups are groups that are really active as actual investor groups, as well as there are, the venture funds and angel associations that will list some of the groups that are active as chartered angel investment groups.
Okay, so then once I've learned where I want to go by checking out some of the avenues that you just mentioned, when I've gone, okay, so I want to go to XYZ to see if they will fund me, how do I approach them? Because before we talked a little bit about vocabulary, and I guess my fear for myself would be is that I learn just enough vocabulary to kind of be dangerous in the sense of, here in California, we have a lot of Spanish-speaking people, and you throw out a hello or a greeting and some words that you learn to create a sentence, and all of a sudden you discover that they think you speak Spanish, and they're talking back to you and rambling on in their language, and you have absolutely no clue what they're talking about. So now that I have that vocabulary, I don't want to approach an investor and then be on this page of, okay, I have enough information to be deadly in front of you, and I don't want to ruin my opportunity. So how do I approach someone now that I know where to find them and I have some vocabulary to talk to them?
So the first thing that an investor is going to ask for is an executive summary. An executive summary needs to be 2 pages. That's it. 2 pages that provides a quick summary of who you are, who you have identified as your team, so that's your capacity, what it is that you're trying to do, what stage of development you are with trying to do that, and what you estimate as the capital requirement, but more importantly, how you expect to return that capital with what return, because it is an investment. So you have that 2-page executive summary, and then you develop a pitch deck. The rule of thumb on the pitch deck is it's 13 slides that should walk an investor through, again, what it is you believe that you've identified as a market problem, what you have as the solution to that market problem, how much capital is required to develop or execute your business plan, and what you see as the next level of milestones. And it needs to be no more than 13 slides, and it's not a product presentation. So out of probably 99% of the decks that I receive, they are product presentations. They are not investor decks. They are heavy on the product, but they are not heavy on the financials. And their go-to-market strategy does not correlate with the market opportunity that they claim that they're going after. So company tell me, oh, we're going to be, a $10 million company in the next 3 years. Yet you go through and you look for their marketing. Oh, we're going to spend $5 in marketing, and it's going to be built off of word of mouth. An investor knows clearly that you have no understanding of business, and you clearly are unaware of what it takes to take a business to market. And so sometimes we say, you better duck and cover, because someone's going to throw that plan and probably anything else in front of them at you if you're standing in front of them and you tell them that. Or you go in and you have financials that show the hockey stick. Run. Run.
Which I would say is probably, like you said, that's what most people do when they're looking for funding, is that they don't understand that it's, yes, you're going to tell me, like you said, the problem solution. This is the problem that my target market has. I have the solution for them. Okay, great. Now let's move on. Now let's get into the whole numbers of everything. And I think that's where, like you said, that's where we all fall short, because we don't understand how, the whole process of asking someone for money, because the extent of our asking is we go to the local bank, we whip out a credit card and put, our expenses on a credit card, or like you mentioned at the top, we talk to all of our friends and family asking for money, and they don't even understand. All they know is that we're asking them for money. So, yeah, I would totally understand being someone with money wanting to throw something at yet another person asking for money and not understanding how to do it. So
absolutely.
Thank you for really detailing those steps on the executive summary and the pitch deck, because that is something that we all should be aware of and know how to do. So moving on, now someone's in front of you and you're talking to them, and I'm sure this is something that you've encountered when you're talking about capital raising and all that. So when working with an entrepreneur, what is like one common misconception they have regarding this topic of capital, or something that you see in them as an entrepreneur that might hamper their ability to garner any sort of investor to want to work with them?
So often the entrepreneur, and I know to be an entrepreneur, you have to have a certain sense of confidence. It takes courage and all of these things. But too often the entrepreneurs attempt to overcompensate in the confidence bucket, and they present themselves as being uncoachable. And so, many investors they use the saying that if you ask me for money, I will give you advice. If you ask me for advice, I will probably eventually invest, because I value the fact that you understand that I'm an expert. I didn't get my money by accident. It wasn't a fluke. So if I'm in position to potentially invest in your business, I've succeeded somewhere in something. So right. I want to be able to have some input about my money, because also as seasoned investor understands this. If you get up to hit the ball out the park, and the ball doesn't go out the park, and say, for example, those unrealistic expectations, the market bears that, oh my goodness, you need a follow-on investment, I need to know that you're going to be smart enough to come back to me and your initial investors and discuss, hey, our plan said that we were going to do X. But you know what? We got to market, and the market is saying, no, you need to do Y. So we really need to pivot. And we're smart enough to recognize that the market is coaching us. And as a result of that, we actually need to get an additional follow-on investment. See, an investor will respect you more if you're poised to have that type of conversation, which is why you'll hear investors say, I'd rather have an A team with a C product than a C team with an A product, because the A team is smart enough to know that it's not about getting to market and we fail. It's not. The reason that business plans don't demonstrate success all the time is the nature of the plans. You're basing the plan in a rear view type manner. You're looking back to come up with what you believe to be pro forma. Pro forma is projected, but they're not actual. And so when you get to market and you understand that, oh my goodness, something else is happening in the market. We thought our customer was going to want A, but instead they want B. An A team is going to be smart enough to go, oh my goodness, okay, let's turn on a dime. Let's actually pivot, preserve what we have remaining of the resources, or recognize that it's not a problem with going back to the investors as long as you have a business case that says, hey, we thought A, but now it's B. We need this money to get this accomplished.
Right. And I'm sure they also like if you come to them and say, like you said, it wasn't what we predicted. As you guys know, we had all this information based on what happened in the past to project forward. However, at this time, for whatever reason is occurring in the marketplace, this is not working, so we need to pivot and we need more capital. I bet they also appreciate that if you're talking to them and you don't say, oh, this just doesn't work. I just need more money. This just doesn't work, because I know that a lot of business owners, especially when it comes to marketing and advertising and all that stuff, they try it for 2 seconds and it doesn't work, so that doesn't work. They don't understand that with most things, depending on what situation you're in, what your niche is, that you have to allow time to tell you that it's not working, as opposed to you being impatient and not recognizing that the time hasn't told you yet that it's not working.
Absolutely, that's true, and that's why that marketing plan that I described is so critical, that go-to-market plan. So often, that is the missing ingredient. It's not just about opening the doors to your business, and, it's kind of like this field of dreams. Okay, we're going to build it, and they're going to magically show up and come. No, it doesn't work like that. It doesn't work like that, no.
Unfortunately, trying to explain that to them is a little more difficult than you would think, because they do believe I'm on the right street. I see all the traffic walking by. I'm just going to throw open my doors, and they're all going to walk through the door. They don't seem to understand that you need to push that process along, that just isn't magically happening. And just because your next-door neighbor has all kinds of foot traffic doesn't mean you're going to have all that foot traffic. This is all so fascinating, and I want to just say thank you for all this really great information that you're sharing with us right now. But I want to take a little pivot in our discussion and talk a little bit more about you, because you have all this wealth of knowledge. This is really incredible. I mean, what made you want to go into this field?
Well, really, I describe myself as being an entrepreneur, an executive, and an educator. And having had to finance my own business, I was a young entrepreneur, so in the very beginning when I created my first business, I created that self-finance by working part-time and investing in a business. Then I became part of an incubator, and through that process, I created a business plan that allowed me to get investment capital in that plan. And so as a result of that, I understood the importance of being able to get not only investors, but also leveraging other companies. So where, companies tee up and think about an exit, when I did a joint venture, I created a joint venture for my advertising agency. And what I realized was that I needed my JV partners to invest a certain amount of cash, but it wasn't just cash that I needed them to invest. I needed access to some resources and infrastructure that they already had in place. So I was able to leverage minimizing the amount of cash, but using other resources. And that understanding has been helpful for me over the course of my career. So presently I spend most of my time working in the real estate development space. And so for every project that we anticipate, we have to put together capital. And while the market was slow, I was asked to sit on several venture committees and advise entrepreneurs and evaluate their plans for potential investment. And so that forced me to sort of move into this space where I began to really specifically attempt to help these entrepreneurs become successful. Hence the educator part, not only in the private sector, but at the university level, and then producing my own pitch forums, and then working with companies specifically to help them become more successful with securing the capital that their companies required.
So you kind of fell into it because you were doing it for yourself, and that's how
absolutely.
You said,
Yeah, absolutely. And so it's so funny because it's one of those things where in going into the market, I looked around for tools. So you had asked me earlier, what kind of tools would someone use to develop the vocabulary? So I said, well, let me, more specifically kind of drill down and develop the vocabulary. So I looked for every book that was on the market, both on the textbooks that were available as well as any books published on the private sector. So I became familiar with what had been published. And I remember going through my garage. I was trying to figure out what I could clean out, and I tripped over this box of stuff. My son was laughing, saying, "Mommy, can we get rid of that box?" And I said, no, babe. I did all of this research so that I could be an expert in venture funding. So he's like, so what are you going to do with it? So anyway, I decided to take that and pursue a doctorate of business administration, which I'm now 4 classes shy of completing. And my working dissertation is around venture funding. So I decided to really make it become an area that I am clearly the expert in, because I felt like, shoot, I invested all this, I might as well get the credit for being the expert in this space.
That's awesome, because I don't think many people would have gone that far. They would have said, I studied it. They wouldn't go, oh, hey, let's get an MBA. I can put that on the wall and say, see, I am really the expert.
I am the expert.
Awesome.
I am the expert. Yeah, absolutely. So one day, I have my friend saying, I said, one day you guys are going to really call me Dr. Money, and it's going to be because I earned it.
That's awesome. So, Stephanie, if someone wanted to get more information from you and learn from you, because you're such a wealth of knowledge, how would our listeners be able to reach out to you?
Well, just for your listeners, I've offered 2 things. One, I give them an opportunity to get a 15-minute free consultation, and if they take advantage of booking that 15-minute consultation, I will also give them a fact sheet that's taken from one of my workshops that gives them some of the information that goes into that 13-slide deck and some initial resources to pursue in order to begin their process of raising capital.
Oh, that is incredible. Thank you. So where do they go to take advantage of that?
So they can go to my website, which is Ardrey Group. It's ARDREY Group LLC.com, and from there should be Book Me, so they can book me for that 15-minute consultation, and they should put the name of your program, Business Innovators Radio, in the comments section, and then they will get their time booked, and when we have that 15 minutes, then they will give me their email and information, and I'll provide them with the takeaway.
Wonderful. That's awesome. So, again, to our listeners, I will reiterate that Stephanie has so graciously extended out an offer to everybody who's listening that you can get a free complimentary 15-minute assessment from her, as well as if you are mentioning Business Innovators Radio in the comment section, she is going to also give you her fact sheet, which goes over the 13-slide deck, the pitch deck that she discussed earlier, as well as some resources that you can utilize when you are going out into the marketplace to look for your investor, which is a pretty awesome thing for you to do, and I thank you for that. Now, if someone wanted to email you or call you, is that an option as well, or do you prefer them to sign up for the assessment?
I prefer for them to sign up for the assessment, but I also can be reached, and I can give you my office and email number, so I can give you that information as well. But the office number is 949-258-4341. The email address is Stephanie, abbreviated as Steph, is STEPH, at ardreygroup.LLC.com.
Wonderful. Okay, so everybody that's listening, I would advise you to go to the website, AudreyGroupLLC.com, and click on the Book Me and sign up for that free assessment. And remember to mention in the comment section Business Innovators Radio so that you can get that really awesome fact sheet that she's putting in there for everybody listening. As well as if you wanted to contact her, you can call the office at 949-258-4341. And again, this is Stephanie Ardrey that we're talking with today. And her email is steph@AudreyGroupLLC.com. Great. So I am blown away by this discussion we've had today. And I wanted to say on behalf of myself and our audience, Stephanie, we really appreciate you talking with us today, and we want to thank you so much for your time.
Oh, it was my pleasure.
Wonderful. I also want to thank all of those who tuned in to listen today. I want to say have a wonderful day. Now go out there and take some focused action for moving your business forward.
Thanks for listening to Business Innovators Radio. To hear all episodes featuring leading industry influencers and trendsetters, visit us online at businessinnovatorsradio.com today.